I want to talk about it. I want to talk about why the overall market had a historic sell-off yesterday and why we had a record-breaking loss for one individual company, NVIDIA. And when they went bad, they went really, really bad. So I want to talk about what in the world happened, who knew, who didn't know, and what it means for all of us in the short term. And this might have a little bit of a negative tune just because this is a bit of an urgent warning because I think things could get bad in the short term. But I also want to clarify how bad is bad. And also I want to give you an updated, understanding of my longer term outlook. And in between all of that, we're going to listen to some of the bigwig billionaires and their thoughts on the situation. Yesterday alone, the overall stock market lost just over $1 trillion. It was an absolute bloodbath, and it all started with NVIDIA. It didn't stop there in the US market. I mean, if you were looking at the overnight session, you could see the Nikkei over in Japan also got absolutely cratered, and it all happened because of one basic lie. US Department of Justice subpoenas NVIDIA. Right away, you should be thinking antitrust, you should be thinking monopoly, and it caused NVIDIA to dive. In fact, NVIDIA lost almost 10% yesterday. It's down even more in pre-market trading, and this is around the realm of $300 billion. So let me give you the legal skinny on the situation. Please remember that I'm no lawyer, but I do understand monopoly, and that's what the DOJ is looking into NVIDIA for right now. NVIDIA gets DOJ's subpoena an escalating antitrust probe. The US Justice Department sent subpoenas to NVIDIA and other companies as it seeks evidence that the chip maker violated antitrust laws and escalation of its investigation into the dominant provider of AI processors. So what's going on here is they're wondering, is it monopolistic of how they're choosing their customers and who they give their chips to first? Antitrust officials are concerned that NVIDIA is making it harder to switch to other suppliers and penalizes buyers that don't exclusively use its AI chips. According to the company, NVIDIA wins on merit, as reflected in our benchmark results and value to customers who can choose whatever solution is best for them. In the DOJ probe, regulators have been investigating NVIDIA's acquisition of Run AI. That company makes software for managing AI computing, and there are concerns that the tie-up will make it more difficult for customers to switch away from NVIDIA chips. Regulators are also inquiring whether NVIDIA gives preferential supply and pricing to customers who use its technology exclusively or buy its complete system. So it's that final part of, okay, are they somehow using their power and influence to ensure that their buyers remain exclusively with them? And you might be thinking, overall, is this a big deal? And the answer is 100% yes. This is the largest singular company loss we've ever seen in one day. NVIDIA has erased $360 billion in market cap if you include the trading session yesterday and also the overnight session. And just on the day, NVIDIA lost $279 billion, an absolute wipeout. The biggest in US history, drags down global chip stocks, and when one fell, all of it fell. And you might be thinking, why was it so interlaced? You might be thinking to yourself, okay, I see that when NVIDIA went down, we had this situation where in reality, it's going to drag the other semiconductors with it. Okay, that makes sense. But you might be thinking, like, why was it all so interconnected? Why did it just ripple out in such a violent manner? The answer to that is right here. A huge amount of big tech's capex is going directly to NVIDIA. Another way to say that is when NVIDIA goes down, it's going to drag Microsoft, Meta, Tesla, Alphabet, Amazon. Don't forget, NVIDIA, Microsoft, and Apple alone are 6.3% of the SPY and 8.3% of the entire NASDAQ. That's just three. When you start to include Meta, Tesla, Google, and Amazon as well, now you're talking about almost 30%. So it gets absolutely nuts. So with it, yes, a lot of people losing a lot of money, but not as much as this guy, the CEO of NVIDIA, Jensen. His net worth dropped by $10 billion. Absolutely brutal. Other people potentially losing money, and I just want to set the record straight on who knew and who didn't know. There was a lot of murmurs going around that Pelosi sold right before, and then of course right away the internet was like, oh my God, Pelosi, no, how is she not arrested? And I can't believe I'm saying it. I kind of got to stand stand up for Pelosi here.
What? Bro, what are you talking about, man?
There is no evidence she actually got out of her position. Congresswoman Nancy Pelosi dumped her entire NVIDIA position just a day before the news of an antitrust investigation. No charges will be filed, as everyone knows insider trading is only illegal if you're not a politician. What's interesting about that is there's no evidence. There's no evidence she sold whatsoever. Someone literally just put it out on Twitter and the internet took a hold of it and ran with it. There's literally zero evidence that Pelosi sold, to the best of our knowledge. So maybe she did, but there's no evidence of it. So the internet's taking with it. I can't believe I'm somewhat standing up for her right now. It's just not what happened. You know who might have been a little bit knowledgeable about the situation? The CEO himself. This is Jensen's selling. Look at it. Look at it. Look how much he's selling. 13 million, 14 million, 12 million, 12 million. Look at this entire thing. He has been nonstop every single day since, when did he really get going with it? June, you could see right here, Jensen on the left in June, every single day, and then every single day in July. And he's been going with it pretty much most of August. So if someone knew, and probably someone knew, because if you looked at the market, we started selling off right when market opened. The announcement related to NVIDIA didn't come till later in the day. So do I think someone knew? 100%. And it might be worthwhile to say, bro, what? He's been selling millions of dollars every single day running into this. So maybe he knew something, maybe he didn't, but all I can say is it was a little bit suspect. Do I think the pain is over? Absolutely not. I don't think it's over, because right now, this was a big thing. This was a legitimate breakdown. There's going to be a lot of pressure, and I don't know if it's necessarily going to get resolved in the short term till we know what's going on with the DOJ. So I want to be very clear here. Short term, I think this is bad. Long term, I think this is a dominant, phenomenal company. So when we're talking about being bullish or bearish, I need to clarify the time frame. In the time frame, when we consider what's happening now, when we consider the rate cut coming up in mid-September, I think things are a little bit frosty right now. They're a little bit froggy. They're a little bit tense. Long term, everything's going to be fine. So the question is short term and medium term. Right now, I have a big old fat question mark on the medium term. I'm leaning a little bit bearish. I don't know how bad things are going to be in the medium term. That's going to depend on really the labor market and the other fractures within the economy. In the short term, this could be bad. So that's obviously my thoughts and opinions on it. Always just respect your risk, play whatever the current trend is. But I want to let you know what some of the bigwig fancy people are saying about the current situation. This is Tom Lee on Squawk Box.
September's not great, and we know, we always make lows in October, or we have many, many times, which means usually a lot of times September was not great.
Remember, September is a seasonally bearish month.
For the next 8 weeks, September.
Next 8 weeks, be cautious.
Yes.
You're not always cautious.
That's right. Market's been up 7 of the 8 months this year, so we know it's an incredibly strong market.
Really good year.
But we also have the September cuts, and we have the election, things that'll get people nervous. I think in the next 8 weeks, people get a chance to buy. So I think it's good to be cautious, but just ready to buy that dip.
You have, because you're fearless and you'll say anything, you have in the past actually talked about election-related trades and Trump trades. And do you see anything going on now that indicates anything to you? Bitcoin hasn't been acting very well.
Yeah, Bitcoin hasn't acted well. The two things we're watching to sort of look at how election probabilities are weighed is Bitcoin and energy. I think the fact that oil is being weak, even with some geopolitical risks, tells me I think the market is starting to bet more on a Trump election. But
because there'd be more production.
More production.
Bad
yes.
for price, which is not necessarily the way that you might think about things, because we hear about, we're at records for oil production. No one realizes the reason we're at records in this country is because prices were so high that it caused a lot more drilling and activity, and the prices were high because it's harder to drill without and LNG and everything else the Biden administration did.
Yeah, that's right. So people think oil should be higher here for many reasons, but oil's been weak. So I'd say that's probably the market.
That's China too, though, isn't it?
Yeah, China's becoming a bit more mysterious, right? There's even risk maybe of negative GDP there.
Okay, so the next, and funny you said 8 weeks. It's almost exactly 8 weeks, I think. What's that? It's like 63 days or so. So some uncertainty and caution going into the election, but in your view, people should get long.
I think they'll get a chance to buy long, yeah. So I think this is one of those where investors need to be cautious, but in the back of their minds, no, this is a strong market.
We're now taking a step away from specifically NVIDIA. And of course, in the very short term, there's the question of how much can the NVIDIA issues metastasize throughout the rest of the market. But when we start talking about the rest of the market, we have Tom Lee right here, who's been very accurate this year, saying, hey, the next month or two could be really, really rough, but I view it as a dip buying opportunity. And hey, for me personally, when it comes to the overall market in long-term investing, whenever there's major dips, yes, it pays to be a bull. It pays to be a buyer because that's literally the entire history of the S&P 500. That's what it always suggests. When you see a major dip and you buy, you forget about it, you come back 1, 2, 3 decades later, and it's much, much more money. That's how the market historically has played out. Obviously, similar to me, Tom is pulling out a little bit more of a cautionary tale in the short term. He did, at this point, when he was filming it, didn't know about NVIDIA. He's talking a little bit about, okay, what's going on with the economy. I thought it was interesting that he's actually tracking Bitcoin and oil to know what the market thinks about who the next president's going to be, suggesting that oil going down and down and down is actually more favorable for Trump winning, like kind of indicative of Trump winning. So I thought that was all interesting. But why he might be talking a little bit about the next couple weeks, next couple months being rough, well, it relates exactly to this, the FOMC meeting, where Jerome Powell, the rest of the Fed, are going to be voting to cut rates. Right now, there's a 2/3 chance of a 25 bips rate cut, a 1/3 chance of a 50 bips rate cut. Historically, whenever we go from this, I guess, jacking up the Fed fund rate, holding it constant, and then starting to bring it down, we're at that inflection point of now bringing it back down. Historically, when that plays out, initially there's a little bit of a pop, and then there's a considerable drop. Am I guaranteeing this is how it's going to play out again? No, but obviously it's nice to know how this has played out instead of just randomly guessing if it's good or bad. For some reason right now, the market, especially within the retail space, truly believes, for whatever reason, that rate cuts just cause the market to go to the moon and rip and rip and rip. That's an interesting story, except it's never been true in the past. There's an initial excitement and bullishness, but then it's very quickly followed by a considerable drop that can last upwards of an entire year. So I want to put that on your radar. Right now in the short term, I'm very much paying attention to not only NVIDIA, but what's going on in the overall market, especially its interaction with not only oil, but don't forget to pay attention to the yen and what's the Bank of Japan doing. That's short-term stuff. Medium-term stuff, how is the market in the next couple quarters really going to digest what's going on with the Fed rate cuts? And then obviously long-term, it pays to be a perma bull. So I want to get that out there because right now it's tense, and I thought it would just be a little bit helpful to give some of you a warning of all the craziness of NVIDIA, FOMC, tanking, Tom Lee. It just, right now, we're in a period of insanity, and that means it's not a bad thing. I don't recommend anyone scared. It's just there's good opportunity. When we see this type of heightened emotion, you're going to see bigger ranges, bigger trading ranges, which means you can make a lot more money, but it also means if you're not protecting your downside risk, if you're not really protecting your position, you could get blown out very easily. So view this as an opportunity that you got to be cautious, but I would not be scared of it whatsoever.